Hi everyone. Hi, welcome. Today we are going to be walking through or going through public sector accounting. Public sector accounting. It's going to be an amazing journey as I take you through these slides. I want you to subscribe to this YouTube channel so that anytime I post a video, you'll be the first to get it. So if you look, you can see subscribed here. And you can see the notification bell. Please click the subscribe button and click the notification bell so that anytime I post a video, you'll be the very first person to get it. Very important. Then these are our social media handles. These are our social media handles. If you go on Facebook, you see Pinnacle Professional College, Instagram Pinnacle Professional College. You go there and you are able to see exactly our social media pages. So you can follow us there, like our material. We post videos there as well. So you can follow us there, share with your friends too. Then let's move on to today's objectives. So today we'll be talking about what at all is public sector accounting. What at all is it? What is this phenomenon all about? Then what are the objectives of public sector accounting? Then we'll talk about the concept of privatization. The concept of privatization and other matters as well. So when we talk about public sector accounting, it comprises of two words, right? Two main words, public sector and accounting. Public sector and accounting. So first off, let's understand what public sector is all about, or a public sector organization. These are organizations that are not owned by private individuals. Public sector organizations are organizations that are not owned by private individuals, but run, managed, and financed by the government. They are run, managed, and financed by the government. So when we say a public sector organization, we're referring to an organization that is not private. And the key word here is that it is managed and run by the government. The government is basically the governing body that seeks to manage public affairs through the instruments of public sector institutions. The government is like a governing body. It's a structure, a system that has been put in place to manage public affairs through the instruments of public institutions. So that's how you should understand public sector organizations, right? They are owned by the government. There's no private hands. It's not owned by private individuals. It's owned by the government. It's for the people and by the people. So that's the meaning of public sector organizations. That's the meaning of public sector organization. Then let's look at the other word, which is accounting. Accounting. Okay, what's accounting? Accounting is basically the process of collecting, recording, summarizing, and communicating financial information to intended users. So, in my financial accounting lecture, I said that you can go and watch it. It's also on this channel. And so please do take the time to watch it. It's going to really help you. So in my accounting lecture, I talk about the acronym CRSC, which is collection, recording, summarizing, and communicating. So that's what accounting is about, right? Accounting is about collecting financial information, recording it, summarizing it, and communicating it. Very important. So we have the two expressions, public sector and accounting, very well defined. So what then is public sector accounting? What is it about? So public sector accounting would be the process of recording, summarizing, interpreting, and communicating financial information of public sector organizations. Do you see? So you can combine the meaning of a public sector organization and the meaning of accounting to come up with a definition or an explanation for public sector accounting. It means the process of recording, summarizing, interpreting, and communicating financial information. Very important. Very important. So that's it about public sector accounting. Now, what are the objectives? What at all are the objectives? You know, the objectives are many. First of all, the purpose of public sector accounting is for planning. Public sector accounting helps to manage the finances or the funds of the institution very well in order to achieve what we call value for money. So value for money is about three principles, right? It's about economy, it's about efficiency, it's about effectiveness. Three main principles, which we'll be touching on in subsequent lectures very, very much. But what needs to happen is that the funds that are entrusted to public sector institutions must produce maximum value. You know, it must be managed properly. It must be managed properly. Then another one is the comparison purpose. The comparison purpose. What do I mean by this? Public sector accounting provides a platform by which we are able to compare actual performance with budgeted performance. It provides that platform by which we are able to measure by which we are able to compare actual performance versus budgeted performance. Very, very important. Another objective of public sector accounting is that government is basically a steward of the public's resources. So by accounting for public sector organization, it is also a part of, the stewardship function. It's a way of showing that, this is how we use the funds you entrusted to us. And this is, what we are presenting to you after the year. Public sector accounting aligns with the stewardship function of government. Another reason why we perform public sector accounting is to fulfill regulatory requirements. Regulatory requirements. Governments are required to put out their financial statements so that people will know exactly how their money is being used. Also, public sector accounting also provides important information that is necessary for running, public sector organizations. So through the numbers or through the financial statements, you're able to see what the organization is doing well and what is not doing well, and areas the organization can improve. Very, very important. Very, very important. So I just wanted to chip in the concept of privatization before we go back to public sector again. I'm sure you might have heard privatization. We've talked about public sector, but I'm sure you might have privatization. What is it? What exactly is it? So this is where public sector institutions are given over to be controlled by private individuals. They are given over to be controlled by private individuals. So it's simply the transfer of a business from public to private ownership. So you are ceding the ownership of a public sector institution to a private individual. And what are the objectives? Why would this happen? Why would anything like this happen? Private sector organizations are reputed for efficiency and innovation because they have a profit motive. They have a profit drive. So it is quite known that sometimes public sector institutions can be known for their operational inefficiencies. And so sometimes you privatize a public sector organization to increase efficiency and innovation, to increase efficiency. Another thing is to improve service quality. Because there's a focus in private sector organizations, there's a focus on profits and, achieving high revenues and efficiency, service quality is of prime importance. It's of prime importance. So sometimes when government wants to shoot up the service quality of a public sector institution, they might just transfer ownership to a private individual who will be able to provide that level of service quality. Another objective of privatization is to secure foreign funds, to secure foreign funds, especially when the private owners are coming from another country. So if they're coming from another country, they are bringing their foreign funds into the country. They are bringing their foreign funds into the country. And it's a way of government procuring or gaining foreign inflows. Then you also have, it's also Another objective of privatization is it helps to boost the private sector. It gives the private sector confidence that, oh, you know what, we can actually participate in this economy. We can actually participate in this economy. Another another objective of privatization is that when a government is engaged in a public sector institution, one of the things they do is, you know, they put money into that public sector organization in order to be able to run it. And sometimes, you know, the expenditure that those public sector organizations are making is higher than the revenue that they're actually generating. So there's a fiscal deficit. There's a fiscal deficit. So in order to clear this fiscal deficit or this negative balance, you know, sometimes it's a good idea to just hand it over to a private individual so that government no longer has to be, you know, making huge expenditures into this public sector organizations, so that the private individual takes care of everything. The private individual takes care of everything, so that government can use its limited resources into other ventures that would yield the highest possible benefits. Then sometimes you also privatize to save taxpayers of their money. Some public sector organizations are simply making losses. And if you are making losses, it means that taxpayers' money is going down the drain. So what do you do to save that? Sometimes you need to privatize. You need to privatize to save taxpayers' money. I hope that's clear. Then what are some of the disadvantages? What are some of the disadvantages? Okay, let's look at some of the disadvantages. Sometimes when you privatize, it creates what we call a natural monopoly. A natural monopoly. This basically occurs when the most efficient number of firms in an industry is one. So if you place public sector organization in the hands of private individuals, it might create a monopoly. And that might be dangerous, especially when public sector organizations are meant to provide an essential service. So just imagine a private individual, you know, having a monopoly over health. They might charge exorbitant prices and exploit customers for that. So it might create a natural monopoly, and that's something we would want to avoid. Another thing is that it's about public interest. The private organizations or the private institutions are not as much as interested in the public. They do not have the public necessarily have the public interest at hand as much as public sector organizations. You know, so there are industries that perform an important public service like healthcare, etc. You know, and profit motive is not necessarily the primary objective of those firms. So when you hand over your public sector organization to a private organization, they are in for profit. They are in for profit. And so the public interest might not necessarily be at heart in terms of the affordability of the service. They are just out to make, you know, profits. And that's all that they are in for. So if they have to charge a high price in order to recoup their investments, they will. So the public interest is not as high as in the public sector organization. So that's something to watch out for. And also, there might be a problem in regulating private monopolies. You know, privatization can create monopolies. And so one of the things that arises is, you know, regulation, how to regulate a monopoly. You know, how to regulate a monopoly. So that's another problem that arises as well. Then you also have short-termism. Private sector institutions are short-term. They look at things from a short-term angle. They are motivated by short-term pressures. They are motivated by shareholder wealth. So that's all they are looking at. And so they are very, very profit-oriented. And sometimes this can be at the expense of the public interest and can be at the expense of, you know, the public's pockets. And so, you know, the public pockets might suffer because these private sector organizations want to make their profits, want to make their shareholders happy. And that's what they are looking out for. So those are some of the disadvantages of privatization. So let's look at some arguments for and against privatization. Let's look at some arguments for and against privatization. Let's look at some. So privatization, one difference is that in terms of ownership, the firm is owned by the private sector. In public sector organizations, or what we call nationalization, the firm is owned and managed by governments. In terms of incentives, private sector organizations have a profit motive. Profit motive acts as incentive for owners and managers. In public sector organizations, the workers may feel motivated if they feel the company belongs to them. Remember, I said public sector organizations are for the people, by the people. Then you have what we call externalities. Externalities. Private firms may ignore external costs like pollution. But when it comes to public sector organizations or nationalization, when we say nationalization, it simply means public sector organizations. It's for the nation. So, but for public sector organizations, governments can put social benefits above profit motive. You see, they put social benefits. But in private sector organizations, they might ignore, external costs like pollution. They are all for making a profit. Efficiency. In private sector organizations, there's an incentive to introduce new technology and increase labor productivity. So if in a private sector organization, if they have to sack employees and it makes sense to them, they will. In public sector organizations, they might find it hard to sack surplus workers. Knowledge. Another differentiator is knowledge. In a private sector organization, a private firm, they employ managers with best skills. In public sector organizations, politicians may interfere in who they select and in who they appoint. So you see the differences here. Another differentiator is natural monopolies. Private monopolies may charge very, very high prices. But in public sector organizations, government can set prices based on social factors. So they look at the socio-economic factors. They look at, what is happening in the economy, be able to set a reasonable price. But for private sector organizations, they may charge very high prices for their services. Then another key differentiator is the industry. So private sector organization basically will work well for certain industries, and public sector organizations too also work well for certain industries like healthcare. It's a place where we need public sector organizations. Just imagine if someone is the sole provider, a private individual is the sole provider of healthcare in the country. That would mean that exorbitant prices will be charged and customers might be exploited. Let's talk about the types of public sector accounting. Public sector accounting may range from international to national to regional to local. So international, there are some public sector institutions that are international in nature. They are public, they are run by the government, but they have an international scope. Then you have the national ones that have a territorial influence which resides in the country. We have a regional one that refers to public sector organizations in states and provinces. Then we have the local, which are public sector institutions at the municipal or county level. Then let's categorize them. Let's start with the central government. When we talk about the central government, this refers to the political authority that governs an entire nation. That's the central government. The central government includes the legislature, executive, and the judicial arms of government. The legislative, the executive, and the judicial arms. These are the three main arms of government. You also have the boards, authorities, and commissions. These are basically institutions that act on behalf of the government. They are independent. And they exist on their own. So examples would be the Minerals Commission, the procurement authority, you know, all these are examples of boards, authorities, and commissions. Then you have local governments. These are made up of metropolitan, municipal, and district assemblies. Those are the local governments. They are grassroots, you know, they are the grassroots, they are the low level. So when you talk about the metropolitan, you know, these are the grassroots level, the municipal level, the district assembly level. So let's talk about the purpose of public sector organizations, the purpose of public sector organizations. The reason for setting up a public sector organization is to provide public goods. These are goods that are essential to the lifeblood of societies. These are goods that are essential to the lifeblood of societies. These are goods that are essential to the lifeblood of society. So health is important, water is important, and they must be accessible. They must be affordable enough and easily accessible by citizens. So public sector organizations exist to do that, exist to provide public goods. Then public sector organizations ensure equality of outcomes. Or ensure equality. So public sector organizations help to correct inequality in the system. You know, it's very, very important. And how do they do that? Basically, it provides a level platform where the rich and poor can access the same services, you know. So if, for example, water, you know, water shouldn't be something that should be enjoyed by only the rich. The poor should be able to enjoy it. So it corrects inequality in that regard. Then it also helps to provide social benefits. You know, there are social benefits that accrue when you operate a public sector organization. It's all for the society. So how do governments regulate public sector institutions? They do that several ways. First, through the annual report. Through the annual report, they're able to assess the performance of the public sector institution and make necessary recommendations. You know, they also control or regulate the public sector organizations by appointing executives for the public sector organizations. Here is where we talked about some political interference, right? Sometimes, you know, public sector governments might choose people who may not necessarily have the highest skills or the best skills, but, you know, maybe like allies of the political party, you know, maybe allies of the political party, which we talked in the previous slide. So government regulates the public sector through the appointment of executives to lead those public sector institutions. And you have government direction. These are basically the government providing some strategic directions on the cost to charge, the service delivery, etc. Government also regulates the public sector through approving for the budget, approving for loans. So it means that government has its eye on the public sector institution. So they always need to come for approval for certain big ticket items like the budgets. If they are preparing a budget, they need approval from government. So that's how government regulates the public sector organizations. Then let's look at the information that public sector organizations provide. We have, number one, we have statutory information. This is information that is required by reason of the law. We have financial information. Basically, when donors put money into your company, into the public sector institution, they require some financial information to understand how these funds were used, you know, and whether these funds were used efficiently. You know, anybody who puts money into a public sector organization wants to know, you know, where did this money go to? Where did this money go to? Then you have budgetary or planning information. You have budgetary or planning information. This is information about the plans and financial budgets of the public institution. You know, so here we are looking at things like budgets, projecting into the future, you know, and all that budgetary information, you know. What is our budget saying? How much are we going to spend? Why are we going to spend it? These are all budgetary conversations. Then let's look at some uses of public sector information. it's getting exciting. Some users of public sector organizations is the media. The media is always on the lookout for public sector information because they want to know the, social impacts of the public programs that are being run. You are using taxpayers' money. So the media want to keep government on its toes. They want to keep government accountable. Accountability and value for money are two important principles when it comes to managing public sector institutions. So the media will want to know. Donors will want to know because they've also given their money. So they want to understand how effectively their funds have been used. They also have taxpayer. The taxpayer also wants to know how his money is used and whether his money or her money is being put to the highest or maximum benefit possible. You have economists. Economists will also want to understand the economic implications of government's actions on the society. They want to understand the economic implications of government's actions on the society or the public sector organizations' actions on the society. So these are some basic users of public sector information. There are lots more, but these are some of the main ones that I would like to touch on in this lecture. So basically, this is where we'll bring this class to an end for today. I hope you really, really enjoyed this class. If you haven't hit the subscribe button and hit the notification bell, please do so, so that anytime I post a lecture here, you'll be the first to get it. Thank you and have a good day.